Hello, trading is closed on November 30th, 2020. Start with our disclaimer. It's my trading plan for December 1st, 2020. We gave smartly in the undesired direction. Calls kill before the open. No guarantee I'm right. It's your money, trade at your own risk. Here's my email. Sorry about the audio, but I have ordered new audio equipment. And my son tells me it should be here before the end of the week. We didn't make any recording over Thanksgiving holiday. The last one we said that it's possible some of the calls would have to wait until Monday. Commonest thing was a gap and prompt move outside the day's range. We certainly got that on Friday. And we had a lower MEJT target. Here was the gap, move outside the range. Here was a lower target. They had printed support resistance at the target. Tomorrow's pattern has the early low, and this one did have the early high, as we said. During the day, MEJT said these squiggles weren't the real thing, that they'd retrace before the market made its move. Well, we gapped down, hit a lower low, closed over all the lows. It's actually a positive pattern. Only way to invalidate the pattern would be to gap and take this low out promptly. Otherwise, we should see higher prices tomorrow. That doesn't guarantee a higher close. Now, we've been saying we should trade below this line by about 250 points. We're getting awfully close. I mean, that's really under 20 points away. So I think that's going to be a target we meet. Usually you meet it by the market dropping. Here we met it by the line going up. So is that good or bad? Well, the main problem I have is still sentiment indicators, and I don't know if this is the right count or the wrong count, but certainly if it is the right count, you can call this a triangle or an ascending wedge or whatever you want to. And one more move up here. If this didn't complete it, one more move up would do it. And if, that's underlined, if we broke out to a new high slightly, had a throw over this line, and if, again underline the word if, that's the right count, it would complete a very negative pattern, with the target being a retrace back down to the origin of the triangle. Now, I don't know if that's the right count or not. Nobody does. But I'd be leery if we broke out to a new high here, if that were to happen, and then quickly reversed, because if this is the right count, we have a long way down. December isn't the time to look for market tops, but nothing's impossible. And the sentiment indicators certainly are at extremes, which call for caution even if we do hit a new high here. So, tomorrow's pattern has yearly low, doesn't mean you won't gap up. We gap down, hit a lower low, closed over all the intraday lows, thus we gap and promptly undercut today's low, which is possible. We should see higher prices tomorrow. It's not a call for a higher close. Sentiment indicators remain compatible with a major top. Were it to happen in December, be most unusual, but nothing's impossible. We're not obligated to trade at a new high of the year, but there remains a higher futures price. Hasn't been seen in cash. Usually it is. It's plausible, though not required, for it to print now. If we were to reverse from such a slightly higher price, wrote the word one twice here, one possible interpretation of the wave count would be the fifth wave of a triangle completing. And if that's the right count, look out below. We don't have to commit to that right this minute. Tomorrow has the early low. If we break out to a new high, I still advise caution, even if we trade up, and that's today's call.